Hi friends, Greg Adamore, the real estate coach, right here on Keen TV. Today I wanted to welcome Stewart, mortgage specialist, good friend of the family. You know my mom, you know me. How long have you been doing this, 20 years or so?
I've been in real estate 20 years, been doing home loans 15 years here in Vegas.
A lot of things have changed quite a bit in the last few years, I guess, with the downturn in the market and everything.
You know, it has, but business is still good. People are still moving here. It's a great town to raise a family, have kids, settle down.
Yeah, definitely affordable, and prices have come down a lot. So
affordable. I think affordable is probably the key word there. You know, we dropped about 65% in value, and we've seen an increase about 30% back from the lows that we had. But even at 30%, Greg, you know, the insurance industry is still saying that it costs more to build these houses than it does to sell them. So it's still a great time to buy. We should be probably another 2 years before we get back to good values again.
Well, this is an opportune time for people to buy now. And interest rates, I was watching the news, and Bernatsky said something about keeping the interest rates low while the recovery is still in process.
Well,
you never know. Huh?
You and I have been doing this for a long time. Yeah. If you can get a rate in 4%, heck, even a rate of 5% is great compared to 10, 12, 14% of years gone by. And we may go back to that eventually, but we should be in the low 4s, maybe high 5s for the next 2-3 years.
Yeah. What in order to qualify now, a lot of people have had credit issues in you know, the last couple 2-3 years. What if somebody's had a foreclosure or a short sale or maybe even a deed in lieu, some type of either a bankruptcy or something? What hope is there for people to be able to re-enter the market?
The normal terms, it's 2 years for VA. FHA is 2 years for a 2 years for a bankruptcy, 3 years for a foreclosure. Conventional is 5 years across the board. But the government did just come out with a new program. If you can show that within 18 months you've reestablished your credit and your reason for your foreclosure was because of a downturn in the market, they are allowing you to get back in at 18 months. It's a little bit more difficult process because you have to be able to prove that you actually had a decrease in income, and you got to substantiate it. But people are starting to do them, and truth be told, most of the people that got out of the market were 3-4 years ago, so they're starting to get back into the market again. And you know, when you lost your house at $300,000, you can buy that same house now at $125,000. I mean, who doesn't want to buy?
Yeah, it's a lot more cheap to buy than it is to rent. I mean, your price, you know, you think that what the house would rent for, and you could own the house for probably less than you'd pay on a rent.
Mortgage payments are still below rental payments right now, and it only takes 3.5% to get in for an FHA. Nothing if you're a vet, and we love helping our vets.
Yeah, and they need the help too. We've been talking about that in recent programs. And where do you see the market in the next couple of years? Or
you know, me personally, I'm very positive about our marketplace. The one thing we know without a doubt is the boomers start retiring. They want to go someplace warm. They want to go someplace tax-friendly for the income that they have. And there's a couple of states that are going to be very tax-friendly and warm. Texas, Florida, Arizona, and Nevada. Nevada, to me, is probably poised at one of the best. We still have good values. We've got good taxes. We don't have a ton of rain like Florida does. We don't have hurricanes like Texas does. So I think we're going to garner a large majority of those retirees wanting to come here and settle in. And truth be told, you know, retirees, you know, like they don't sleep all the time. So, you know, if you want to wake up 2 a.m. in the morning and you want to go out shopping, we got shopping for them. Yeah. You know, so come on down.
Yeah, Las Vegas, great. No state inheritance tax and no state income tax.
So. No. Come on down.
Yeah,
you know?
It's welcome, and we welcome people to Vegas. I've been an ambassador for Vegas for many years also. It seems like everybody who leaves here eventually comes back because there's no place like Las Vegas.
And there isn't. And one of the tools that we have for the retirees is the reverse mortgage. Most people think a reverse mortgage, you have to own the house, then you do the reverse mortgage. But you can actually use a reverse mortgage to buy a house with. If you put enough money down, you can use a reverse mortgage if you're 62 and a half years old or older to buy a house and never make a payment again. and that house is yours until the day you pass, and the day you pass, it goes to your heirs. And at that point, your heirs have a period of time that they have to sell that house within in order to pay off the loan, and then they take the equity that's left over. It's a great tool.
So they can actually, the heirs could refinance the home or sell the home.
Well, yeah, refinance it if they want to keep it, sell it if they want to do that. And let's say they just don't want to bother. They give it back to the bank, and the bank turns around and sells it, and it's done. Nobody owes anybody anything.
Well, that's a beautiful thing. For the viewers that are 62 and a half or older, can you give like an example? Let's suppose somebody's been in their home maybe a long time. Maybe it's they've been in the home 10, 20 years. They have equity in the home, but maybe it's too big for them anymore. They want to downsize to one story or more economical, say more energy efficient type home.
Yeah.
Maybe more in a retirement type community. They don't have to sell that home, or they can borrow against it like a bridge loan to get equity to put down on the new home.
They can do that, but I usually try not to do that, because now you're creating two mortgages.
Too much debt.
Yeah, you're creating too much debt, and there's no reason for the extra expense. So what we've been seeing lately is they sell their house and they do a short lease back, say 60 days. So they do a lease back, and it gives them enough time to close on their new house. One of the areas that they're really trying to focus on buying now is the 55 and older communities. They're all single story. They usually have 2-car garages for them to park their cars in. They have all the maintenance that goes with it. Most of them even have the building maintenance. So they paint it, clean it, do the streets. They're very secure. They're guard gated. The retirees they're loving it.
Yeah, we've got Anthem, we've got Del Webb, we've got several of the retired program. There's a wonderful place for retirement. I've seen a lot of people that are in my age group, and we want a just nice simplified life. And I know the food, the entertainment, you can't beat it.
The golf.
Vegas, and the golf. Golf is everywhere.
I mean, those golf communities are gorgeous. When you walk outside, you don't have the big backyard because you don't need it, but you got 100 feet of golf course right in front of you, and it's green, it's lush. The animals are out there playing around, and you can always say hello to a golfer.
Yeah, they're friendly. I live in the Rhodes Ranch community, one of the areas where I specialize in, and they've got the rabbits, and we walk our dogs, my wife and I, and I mean, it's got security, you got golf, you got restaurants, it's open to the public too, so a lot of people haven't known that. It's very affordable. But what a beautiful community to live in, and the security of having a gated community is ideal for people of all ages, but retired. We do have a lot of cross-section of residents in that community. A lot of people don't want to be limited just to a senior community, but they do have a lot of advantages. And we recently closed escrow with a family, and I just got a letter that they're going to take up golf after 35 years. They moved to Aliante, and they love it out there. They go, well, we're right here. We got 2 fairways right by our house, so why not?
My wife bought me a golf package. God, it's got to be going back 5 or 6 years now. I never did get a chance to use it. I'm always too busy working. I'm going to be that person. The day I get to retire, I'm going to be that person out on the golf course. Whether I can hit the ball or not, I'm just going to be out on the golf course enjoying the greens. Yeah. Getting back to the seniors, one of the things that's also getting popular here is the high rises. The high rises are getting very popular because the seniors can go in, they got their tennis, they got the basketball courts, they got swimming, they've got the jacuzzis, they got the workout facilities. They even have these things set up now where they'll bring the groceries to you, so you don't have to leave. They got parking garages, parking structures. You get in your elevator and you go right to your community, and they're close, they're affordable. I think they used to call it the Manhattanization of Las Vegas 5-6 years back, and they're great communities. We are now doing financing on the high rises, so that's making a huge comeback. So, as the viewers are out there and are thinking about something, don't overlook those high rises. They're gorgeous. The views,
Yeah, that's right. They got the new towers and all around City Center, and people forget just how quickly we're growing. And when we talked about the Manhattan of Vegas, we saw the high rises built. It looked like a little mini New York.
It did, yeah.
Cranes everywhere, and the market tanked. But I think it shows that Las Vegas, before the overall market tanked nationally, that Las Vegas was one of the most vibrant, strong economies.
It was, and you know what? We've made a big comeback. When the market tanked, the investors, which got blamed for a lot of this, but you know what? The investors brought us back out. They bought a lot of the housing. as the market was going down. They stabilized our market, and now that our market's stabilized, they're starting to move back out and go into greener pastures, which is great for us because we're not driving the prices up like we were. And so there's buys now again. Our inventory's doubled in the last couple of months, which is good for anybody coming out. So we don't have bidding wars anymore. You're not overpricing anymore. People can go in and find the house they want, settle in within 60 or 90 days again.
Yeah. So it's nice without the stress. When
Yeah.
We're making multiple offers.
Yeah. And that was stressful for all of us.
Sure.
I mean, it's stressful for the buyers because they're making multiple offers. For you and I who have the transactions that are going on, it's stressful for us because now we've got to keep an eye on multiple transactions, multiple offers that are going on. It's nice that it's coming back to just a norm again.
Yeah. It's a healthy market.
Yeah, exactly.
Still a little bit shortage of inventory, so but not nearly like it was before when the hedge fund buyers were gobbling everything up, and the people who are trying to get finance, the mortgage companies like yourself. And tell us a little bit about your mortgage company now, your Security National Mortgage. And
I've been with Security National Mortgage almost a year now. Great company. I've got a very nice office. In our office, we have our underwriters, we have our processors, our whole staff is right there. We're not farmed out throughout the entire country like most people are. So if I get a transaction where I got to go and ask an underwriter, I can walk right across the hall, knock on the door, and get an answer right then and there immediately. I'm not waiting for the phone call back. I'm not waiting for the email. So it's bolstered my business because from my end of it to be able to get those answers, that's what everybody wants. In-house we've got some great products that we're offering. One of the transactions that I do is 580 FICO. Nobody wants to touch those lower end people, so I'm able to do the 580 FICO and above at 3.5% down, and that's great. We're doing the high-rise financing. So even if you can't get financing conventionally, we have a 20% down financing for the high-rise condos. That's doing great. We even have a portfolio loan that we offer exclusively for those in Nevada, and what that is that's 35% down, and we overlook the blemishes on the credit report. It's not the subprime loans of years ago. We're still qualifying you. We still want to know that you can qualify income-wise to buy the house. But you know what? We understand people made mistakes or markets made mistakes for us, and people lost houses. But we're able to get you financing, good quality, short-term financing until your credit's reestablished. It's only 35% down. It's our portfolio loan. So Security National Mortgage has done me very well in the last 9 months.
Would that be considered a hard money loan? Or?
It's the same thing as a hard money loan or a private money loan, but it's our portfolio loan. So it's hard money is usually with an individual out there who's just got deep pockets and doesn't mind lending his money. This is a little bit more stringent because we're a bank. We're a mortgage company. We have rules and regulations that we have to follow. But it's our money, it's our portfolio loan, and it's a great company. So it's done
usually,
very well.
What kind of term they usually?
We offer a 2-year and 5-year term on those loans. Most people opt for the 2-year because that's really all they're looking for is just a bridge loan to get them to they get back normal financing. The rates are set right now at 8.99. Higher, but again, it's not that bad. There's
for 2 years.
It's 2 years. There's no mortgage insurance, so you don't have any of that. There's no prepayment penalties, and
no points or a few points. Or
there's points. That's how the company makes their income from the points. But all in all, it's a great loan. It's a good loan.
Say somebody wants a good loan like that. Maybe they've had a foreclosure. They've got some money now. They're reestablished, getting back on their feet. They don't want to wait 2 years. Let's say the values went up another 10-20%. I think we had a guest on recently from the Lead Institute of Real Estate at UNLV. They tracked the appreciation last year 29 to 30%. And CoreLogic and some of the other statistics to the Greater Las Vegas Association Realtors said 29% year over year. So I'm not saying it'll be that robust this year, but let's say over 2 years, if somebody wants to get into a loan at 8.99%. They still probably going to be money ahead because not considering the tax benefits and the peace and the stability that comes with home ownership, but there's likely to be some decent appreciation.
There is. Again, like I said earlier, my expectation is we're going to see a good next 5 years, because those retirees are going to come. They're going to come. I mean, the handwriting is on the wall, no matter how you look at it. People want to get out of that Rust Belt, those cold areas, and they're going to be looking for someplace else to go. And Las Vegas is going to be that.
Yeah, we're kind of the heartbeat of the Sun Belt over here.
We truly are. I mean, we've got what they want. We've got what they offer, and those people that are running our state, those people that advise us, like the Lead Institute, they're making sure we go in that direction. And the Lead Institute's a great place. I actually graduated from UNLV with a degree in real estate and financial services. So, that's where we studied. We studied with the Lead Institute. Great organization.
Yeah, we had Marcus Conklin on. Yeah, I also graduated from UNLV, and we love our Rebels. Go Rebs. They're making a comeback. You talk a little bit about the loan process. A lot of people are not sure how in a nutshell, how does that loan process work?
The loan process has changed pretty dramatically over the last 5 years, because now everything's done on the net now. I mean, we still have to exchange paperwork. We still have to have signatures. But where I used to meet everybody and shake their hands and get to know them a little bit, it's not that we don't do it. People are just opting not to meet anymore because we're all so busy. Yeah. Everybody has either a fax machine or a scanner at home. We shoot them the papers. They go to our secure website, download the forms. Some of the pages are e-signatures. Some of the pages actually still have to be signed, and they just send them back. So for the most part, we're able to approve somebody in 24 to 48 hours. We're still closing loans in 30 days or less, which is great.
That's fast.
Yeah, well, it's because we have all of our in-house underwriting.
That's a great
our staff is right there.
Yeah.
And it's going smoothly. So what we do is we get the paperwork, we get somebody approved. Those that have maybe less than perfect credit with the 580, what I opt to do with them, because that's one of my specialties, is helping people like that. What we do is I'll push that loan through underwriting. So we actually have to spend our time and money doing that. We don't charge for it. We get them fully underwritten before they even go out looking for a house. So if someone says, hey, listen, can they really close? Yeah, here's the full underwriting approval, not a pre-qual approval. It's a full-blown approval.
And that makes all the difference in the world for us in the business, as long as I've been in business 35 full-time years, and I know when somebody comes to me with underwritten approval, it's pretty much a done deal as long as...
That's right. And at that point, we can even do a 3-week close. So we're moving.
Just need time to get an appraisal. And, of course, appraisals today, a lot of people have to understand that the banks are still a bit conservative about them. But that's price control. I mean, you want the bank's input. You want them to have a conservative appraisal. Guarantee you don't pay too much, because they are pretty conservative.
Yeah, and they're conservative, but... our interests are aligned with the home buyer's interests. Because yes, they want the money, they want to be able to buy the house. We want to make sure the house is in a good enough shape, and we want to make sure the value is there. Well, what homeowner doesn't want to make sure the house is in good shape and the value is there? Nobody wants to overpay for something. So our motives are the same thing as their motives. They want to make sure they're getting a good house, and we want to make sure they get a good house too. So our motives are the same. And the owner of our company, at least the local owner of our company, he's a great guy. He's a good local person here. He's been around for a long time. And Dave's a great guy. Runs the company.
Dave.
Yeah. And we love him there. He's a real nice boss.
Yeah, it's good to have the good leadership in any company. Somebody's watching TV. Maybe they have a friend that's been in the mortgage business or helped a neighbor or someone. How would they be objective if they should decide if it should be you to do the loan or a friend of their daughter's or somebody they met at the golf range? How do you discern which is a loan representative that you really want to use? And what criteria?
You want somebody who's been around for a little bit, because the mortgage industry has changed dramatically, and it's not an industry you can just jump into. You have to understand what the guidelines are, and it's not just ratios. It's not just looking at a credit score. You have to understand, because everybody comes at this a little bit differently. Some people have credit issues. Some people don't. Some people have income that you can't necessarily see, but we can see it's there. So you have to have somebody that's been around, and I've been around. I've been in this community. I've been doing this 15 years. You can look me up on the net. I mean, my name is all over the net. I've got reviews all over the place. I've got, well, you and I have known each other. I've known your mom.
Yeah.
As I said earlier, what, 14 years? You and I have known each other probably 12 or 13 years. So I've been around, and you don't stay in this industry through good times and bad times if people don't want to do business with you. So as far as why somebody would want to do business with me, I've been around. It's hard to say much more than that, because people want to do business with those that they like and trust. So that's probably the big thing, is trust.
I think everybody wants a professional they can trust, and I know that you've done good business in the community and come with the references. Also, I think you're doing some training. I got an email today that social media now, like you said, that's a big part of the communication network, right? It is.
We try to do all we can on social media. We try to get our face out there so people can, again, find us, build a rapport through social media, and it's hard to define what rapport is on social media, because there's the norms that we go through, but we try to let people know who we are. This is a religious broadcasting station, and we're religious. We go to church. My family goes to church. My kids believe in God. We pray with them every night. They read the Bible themselves. So I think that's what people are looking for a good, wholesome person.
Yeah, and I think you homeschool your children too?
We do. I help, but it's definitely, without a doubt, it's my wife Sandra. Yeah. She's the bull on that one. But I tell you what, there's nothing like it, Greg. Yeah. You don't realize what you know, or you don't realize what you don't know until you have to teach it to somebody else.
Well, that's true.
And nurturing my kids, nurturing my kids in schooling in a religious atmosphere is great. Is absolutely great. My mom, who's 82 years old, I mean, she absolutely loves it. Because that's how she raised us. Yeah,
and elderly people, sometimes they really do know so much important things that give direction to the youth, and if it's the young folks that will listen, then it pays great dividends to get wisdom and seek good counsel.
It is, and the homeschooling has just broadened our knowledge. I mean, we're not here to talk about that, but it's broadened our knowledge, and it's allowed me to meet a lot of people, and those people ask me questions constantly. Real estate questions, mortgage questions, and those questions are starting to change, because over the last couple of years, it's like, oh my God, I got a house that's $100,000 upside down. What do I do? And that's how you build rapport. And although I couldn't help those people, 3 or 4 years ago, you're still there for them, trying to help them out, trying to give them advice. And, when you help somebody, karma comes around and they help you later.
Yeah, we're in the business of the knowledge business, of really educating people and helping people and being problem solvers, whether you're on the financing end of it or on the real estate end of it. People need somebody they can trust and depend on. I know you're a family man, and I guess you're involved a little bit. Tell us a little bit about you. I know you're involved with the Republican Party a little bit.
I am. I enjoy politics, if you can enjoy politics. I enjoy politics. I want to give back to my community. I want to help out. I want to show up to vote. I go door knocking for the people that I believe in. I'm a conservative person. I'd probably rather leave it at that. I don't want to get too...
Well, it's good to be involved, though. I mean, absence governs consent. If you're not involved with the issues, if you're not paying attention, somebody needs to be making sure the plane's flying right. So I think it's good. I know, I think with one of the political campaigns I bumped into you, I don't know if you were working on or with one of Danny Tarkanian was running the office. And a lot of nice people showed up.
Yeah, Danny and Amy are great people.
Yeah, they're very much.
In fact, they're very good church-going people, too.
Yeah.
I helped a lot with Danny's campaign when he ran it, and he barely lost, but he had a good group of people over there. Tim Williams Jr. ran his campaign, And he's another good guy that you may want to try to interview one day.
Yeah.
He was in the real estate business, and now he's helping with the Republican Party as well.
Yeah, I met him at the opening. A nice looking guy, a nice family man. Yeah, he was a pleasure to meet. Yeah, we always try to have nice people on the show that will help and that invest in the community, that want to give back. They're conscientious, and we know that the Lord blesses those who help one another. So it's always important. A lot of people are really hurting now. They need someone they can call upon. Maybe they don't know it, but even if they're upside down their home, they can find out a way to refinance. I think there was HARP programs. There's other programs.
Yeah.
People owe $300, the house is worth $200, but they can still lower the interest rate and lower the payment and make it easier to afford in some cases.
Yeah. And we didn't touch on the HARP, but the HARP program was a great loan. It still is a great loan, actually. They've been talking about coming out with a HARP 3. I don't know how they can overdo HARP 2. HARP 2 actually worked very well. It brought rates down. It brought people's terms down. And now that we've seen affordability come back, people have seen values going up, and it's allowed people to stay in their homes, keep their homes, keep their good credit, and that means a lot to people. It keeps a community strong by owning real estate.
Yeah, it does. It is. And hopefully we'll talk about retirement, and when you get to break out those golf clubs. And I know my wife and I kid around. I know about tired but not retired, and I'm always working harder and smarter than me. But it's a joy now, because anybody that really serves the public in the capacities that we do, you have to have a passion for what you do. You have to really love it, and you really have to love helping people. At the bottom line, if you don't really serve people and help people, then it's just dust in the wind, right?
Yeah, I got into this industry, and I don't remember if I was 18 or 19 years old. I mean, I'm 43 now, Greg, and I've been doing it a lifetime. I got into it. In fact, you mentioned Century 21 earlier when we were talking. Yeah. That was the first company I worked for. Was actually Century 21 Gavish 24 years ago.
Wow.
And I got into it, and I've loved it ever since. I moved out here to get my degree in real estate and financial services, and I haven't looked back since. My mom keeps asking me to come back, and I keep telling her I'm going to, but I'm like, Mom, things are good here. Things are good here. They're working.
Why you want to go anywhere, right?
I said, why don't you move out here? But she's 82 years old. She's not moving. She's not leaving her grandkids and her family and her church after 55 years.
No, you don't.
So
Well, gosh, Steve Stewart, it's a pleasure having you on the show. I look forward to having you back on. Thanks for coming in short notice. And we'll see our viewers next Tuesday right here on Keen TV at 9:30 a.m. and 5 o'clock p.m. Thanks for sharing with us.